Okay, we're at the top of the hour, and I want to welcome you. My name is Dawn Rickabaugh, and I'm the owner of NoteQueen.com and Q Capital, and I'm here to facilitate more understanding and ways to make money and solve problems with owner financing and notes. When you understand the secondary market for notes, you automatically become a much, much better real estate investor, and you can close deals that other people can't. And more importantly, foundationally, you can learn to spot deals that most people aren't even looking for and wouldn't see if it was right in front of them. So I just think it's a really good time to be positioned. It's always been a good time. I've always loved this space, but particularly, you know, there's a lot of stuff going on in the world. There's a lot of let's just say unknowns. I think it's going to be basically, you know, buckle up, buttercup kind of year. But I think it's a perfect time to position. Now, I actually have been expecting a real estate pullback for quite some time. A lot of us did. And my guess is they might be able to string it out. Since this is an election year, they might be able to hold things together until at least after November, because they're rolling out all these programs like, oh, okay, you can't afford it. Let's do another mod. We're going to give you a 40-year loan or a 50-year loan. Oh, now we're going to put part of your loan at 0% interest on the back. Oh, you don't have to pay now. Oh, now there's some subsidized payments. So we'll give you a subsidy. Your mortgage payment's $4,000. We'll give you a $1,500 subsidy, but we're going to put it on the back of the loan. So there's a lot of things that they're pulling out, all the tricks, I think. It's hard to get around even right now. Some areas are already seeing big price reductions. Some areas of Florida are hit pretty hard, Austin, and some other things. And even in the good areas here, I'm still seeing more and more price reductions. And so even if the Fed pivots and does reduce interest rates, which I think a lot of people are probably holding their breath for that, thinking, okay, when rates come down again, then I'll be able to get $1 million over asking for my house again. I'm just not sure that's going to happen. I mean, if it does, great. I mean, I have real estate. I have lots of notes secured by real estate. I'm not wishing for a crash. I'm not wishing for the softening necessarily, but at the same time, my 30-somethings, none of them can. It's tough for these kids to afford a house. There's a shortage of affordable inventory. Let's put it that way. The builders are making their, their $600,000 and $700,000 and $800,000 houses, but there's no buyers for those houses. And I don't know if you have in the past checked out some interviews I've recommended with Melody Wright and Adam Taggart, and there's a new guy, actually, maybe I already did recommend this, Sachs Realty. He has a great YouTube channel. But, you know, when people get on the road, there's a whole lot of ways where numbers are kind of cooked. You can't really count on the numbers that we're getting in the same way. A lot of stuff never even hits the MLS. And you and I know that. If you're on this call, likely you've been in, you've had deals where it didn't so much as even go on Craigslist maybe. I don't know. It didn't hit Zillow. It wasn't a Zillow listing. It wasn't an MLS listing. There's just private sales that happen a lot. And from what I have gathered, the builders have pulled out all the stops, and they're just throwing cash at buyers. They're buying down their rates. First it was for 1 year, now it's for 2, maybe 5 years. Okay, all these cash concessions at closing, well, that's not really showing up in the numbers. I guess I want to start off this new year. Happy New Year, by the way. Oh yeah, it's Happy New Year. What I want for this year, and thank you, I really want you guys to be just set up, okay? And so I'm gonna keep hammering, these are my soapboxes. All right, you're here for investing and all that. Invest in yourself first, okay? Make sure you and your family can survive comfortably if you couldn't go to the store or you couldn't order anything off of Amazon for at least 1 month. Please do that. That's the most important thing. There could be power outages. There could be just a lot of weird things. If there's something that goes on, you know, the grocery stores only have 3 days of food in there. And you don't want to be like in there fighting for the last, you know, can of beans in there. So please do that if you haven't already. If you just have a little bit of money, or if you have a lot bit of money, I still would suggest that the way to make a little bit of money go a long way, and like I said, this is the kind of things I tell my kids, is just build your own businesses, invest in yourself, buy 1 or 2 or 3 silver coins every month, and if you can swing it, you know, buy $50 to $100 worth of some of the crypto projects that are still undervalued. We're still so early in this space. So, but if you're already invested in notes, I'm just getting a whole lot more conservative. So that's why I'm really going after seller financing. I'm going after the point. Let's put it this way. Now, I'm a pretty like organic, non-GMO type of person. And the whole idea of like a test tube baby where you can DNA, you know, these futuristic things that I've sort of heard are coming in our future. You can sort of DNA program what kind of baby you want. Now, I'm really offended by that in real life. I'm very pro-organic and non-artificial things, but I gotta say, when it comes to the note business and a note that I want, I do want to custom create that note as it's being created, before it's created, because if I'm there at the point of note creation, then I can help that baby be born to be like a super soldier, you know, have all sort of superpowers. So even if the seller needs to walk away with cash, even if they carry paper, they offer owner-seller financing. If I'm there when that baby's being born, when the DNA is being genetically modified, yeah, I want to genetically modify the note babies as they're born in that seller finance transaction. And then I can buy a piece of that with almost no discount. And so that's really powerful strategies where it's frequent that someone will say, yeah, I'll carry, and the buyer says, well, you know, well, I only have 20% down, which is still a great down payment. But then the buyer or the seller might say, well, I need more than 20% down. I need an extra 50,000, or else I can't do X, Y, Z. I can let the rest ride, but I can't do what I need to do. So that's when you can come in, create the note properly, and be able to sell a front-end partial for almost no discount. Now, after it's already born, you know, we just do the best that we can with that. And so anyway, that's my big passion there. Commercial real estate's already in trouble, and we haven't even begun. There's, I think, commercial bankruptcies are up 70%, something like that. There's, especially in office space, multifamily is also kind of struggling. But I think that they might be able to hold, like I said, hold this off for another year. So to me, I'm looking at where are my weak points in my portfolio. You know, what sort of things where it's borderline, like I should have foreclosed on them probably 6 months ago, but I haven't. So there's such thing as sort of a first mover advantage. And in some ways, I don't think I'm so first mover, but what I'm looking at right now, if I have any borderline notes in my portfolio that just haven't been performing well, I'm just gonna get more hardlined with it, because I would rather foreclose and get these things back out on the market while it's still good. Yeah, I don't want to foreclose when maybe next year, when they can't kind of contain everything. I don't want to be competing with, now there's 100 foreclosures in that subdivision. I'd rather be, let's foreclose now and just clean up that mess while things still seem to be okay. You know, there's just this weird thing of like, I just don't know how they keep these things going because the fundamentals are just really nuts. But maybe you disagree, and please, I really love your input. First mover advantage. If you got any messes in your portfolio, good idea to just clean them up as soon as you can. That's what I'm doing. Oh, this is not financial advice. Did I say that? I think I forgot my disclaimer. This is not financial advice. This is just what I'm doing. So I just want to clean up anything that looks weak now before there's a bunch of stuff on the market. I think inventory will come up for a variety of reasons, and the guys on Saks Realty, Adam Taggart on Thoughtful Money, a lot of those places. And the other thing is and I think this is a great idea for anyone who, I don't know, there's more and more people that are seeing the writing on the wall, and they're getting out now. They're selling now, and they're renting, and they're going to wait for the market to come down. And so I also think if you're thinking about that, of just selling now, renting, taking your cash, putting it on the sidelines, maybe diversifying just a little bit of it, because that's what I'm doing, is cleaning up, positioning in things that I think, getting ready to have a lot of cash in 25 and 26, when I think there'll be a lot better buying opportunities. And it doesn't even, like you guys all know, it doesn't matter if what the banks are doing, because my whole world is owner financing. It's been decades since I got a loan from a bank. Literally when we first bought our house and I refinanced it, and that's it. And guys, I'm going to be 60 this year, 6-0. So it's been, then it has to mean it's been over 30 years since I had a bank loan. So, and another just little thing to let you know, I have been going over a website and branding overhaul. It's technically up, but there's a lot of, don't go look yet. It's all the things aren't fixed, but I'm really looking forward to that being a more robust place and just funner. And then I want to do make the membership. I'm on Patreon right now, and we meet, our next meeting is this Monday night at 5 p.m. Pacific, and we meet 3 times a week to have chats just like this, and even more, a lot of really cool personal stuff too. I really love that format, but I'm looking to get some upgrades into that system. I really don't want to be on Patreon anymore. It's just, I just can't do it all right at once. It's just quite a process. So that is my initial rant. Told myself I'm not going to forget. I want to look at everybody who's here. Jim, nice to see you. Christy, my dear daughter, nice to see you. Denny, you are a busy man, jet setting all the time. Sue Ellen, nice to see you. Adolf, Desiree, Mijo, very nice to see you. Stephen Desmond, Joe Rodriguez, Ed, hi Ed. From Baltimore or something like that. Yeah, Jacqueline, great to have you on. Sharon, Denise, Jim, Gerard, Lee, Chuck, my favorite cowboy guy. Okay, Aliana, Michael, Brenda. Oh, I love to see you guys. Thank you so much for showing up. I just wanted to see that, because sometimes I just forget, and I just want to appreciate all of you. So,
may I start?
Oh, go ahead, Denny.
I kind of joined late, and your presentation sounded more like Armageddon, but I'm sure you're saying we're gonna have a down market. You're thinking within the next 2-3 years. Is that the presentation that I'm getting from you?
Yeah, I've actually expected how can they keep things going for a while now, and I think if not this year, if they happen to hold it together because it's an election year, I think I just can't see any possibility that things won't soften up in 2025 at the very least. So I'm just going, okay, let's take advantage of while things are still up and the average person still thinks that, I guess, life seems normal and the markets are normal and the money supply is normal. I'm going to take advantage of that. So I'm going to cash out of things, get my foreclosures done before there's 100 times what there is right now, right?
So you have some questionable properties that you think you want to clean up right now.
Or if it's like,
hey, you already see gas prices going down, and I'm sure they're going to put the window dressing on to make everybody feel good for the election. But,
right, and I just don't trust it at all. There's a lot of like underneath it. There's just things that aren't as they seem, which is what's new. I mean, our new reality.
Sure.
But yeah, so that, or if you're like, hey, my house is worth a lot right now, I think I'm going to take my equity off the table and maybe I'm going to rent, maybe downsize. I think it's a good time to do that before everyone else has the same idea. Or the Airbnb people, or, you know, I don't know. There's just default rates on VA and FHA, which are the most easily tracked, I guess, are up quite substantially. And then they're pulling out all of these wicked programs that just continue the slavery. Okay, if you can't already afford your house and they just keep throwing stuff on the back end, what you are is you're a renter who's responsible for taxes, insurance, and repair. That's what you are. And so that is a really terrible way it just wreaks havoc on someone's psyche. You're always worried about losing your home. You can never afford. So you take the next modification, the next bailout, the next thing. But it's basically perpetual debt slavery. Unless the market, went up by double, then, oh, yay, now I can sell for a profit. And I don't know, maybe in years and years, it could be worth more, but that's only because the dollar's worth way less. So, so I don't know. Some of those situations I'm not seeing a good trajectory, and I think more and more people have more and more credit card debt.
Sure.
And so many people basically just live paycheck to paycheck, even if they make a great income. They're a lot of, I don't know, I think it's 60 or 70% of America doesn't have $1,000 saved up for an emergency. So, if we get more layoffs, anything that's just unexpected, I'm also thinking there could be terror attacks on our own soil. I think that's probably coming this year. So I don't know if it's all blown out war or anything like that in a traditional sense, but I just think it's time to just batten down the hatches in a lot of ways that are more important than what we're talking about here, notes and real estate, except for how it affects your finances. If you're just struggling and struggling. Now, if you do have a great underlying financing, clearly there are ways that you can do a subject to, but the right way. There's only one way I would do it now. Only one way that's actually federally compliant, and that's using a title holding trust with a very specific system involved with a corporate nonprofit trustee, et cetera, et cetera, et cetera. That's the only thing that I've ever seen that I've been reminded of in the last few months, that I learned about actually back in the mid-90s. But anyway, so...
Well, to that, in addressing that, if any of you want to sell your property and you have a little bit of equity, Tycor Title will allow you to do a wrap, and they will insure it.
Yeah, Danny, I'm really surprised because my title company will not insure a wrap, a subject to wrap, anything like that if it's FHA or VA. But they'll allow it. It just doesn't mean it's the safest way to do it. Because with interest rates being higher, I set things up where I should have been able to write a 1% loan for 20 years. And then the seller, who I was the only person who could solve her problem because I had a creative mind, in my head, and gave her $40,000 to move to Arizona to buy another house to get started again. And I was the hero, but then 5 years later, I was not the hero. She wanted me off that loan, and And it was just very lucky for me, very blessed that it was a good time for me to sell anyway for a couple of different reasons. But if I had bet everything on being able to ride her loan for the 20-year term that it had left, I would have been in trouble. So let's see, what terms, Jacqueline? Jacqueline, you want to come on a little bit? Yeah, so how are you doing?
Good, how are you? I'm in your PTRN class, but I just had to ask that.
Yeah. I was gonna ask you, did that deal go through for you?
No, so the guy that brought the deal that was having some trouble, he ended up getting a loan, which I'm happy for him. He wanted to really keep that property.
Oh, okay.
So, yeah.
All right, well, good for you. I mean, good for him. Well, we want what's good for people, right?
Yeah, he was super excited. He worked really hard to get that deal, so I'm glad that his loan went through.
Okay, excellent. And then what terms create a pregnant note to sale for a partial front? Yeah, okay, so it really depends a lot. That's why it depends on the price point. It depends on the type of property, how much of a down payment, but in general, because let's just put it in this, we can go over this in a lot deeper on Monday, Jacqueline, but
okay.
But the basic point is, you guys know, if you've looked at your amortization schedule, that the first front of a note is mostly interest, right?
Yep.
So if the seller only needs 40, 50, 60, 70, $1,000, I don't have to buy very much of that note. Right? I don't need to buy very many payments. So when they get the note back, number one, since it's in a very safe position, it doesn't need a huge discount, right? Because I'm in first position of first position. That's if you can get an A++, it's like that, right? First plus position, and then when they get the note back, the UPB, the principal balance on the note, has usually only gone down a couple $1,000s. So there's no doubt there is some discount, but it's negligible and not very painful to the note holder, because it doesn't. So if that note pays off, let's say they got $50,000 up front and they only gave up $2,000 of principal balance, so they're not giving up very much. So when they get the note back and they're starting to receive the payments, it's kind of like they got ahead of the game. They got 50,000 and only lost 2,000 in principal balance. So it's just, in this business, it's how we package it up, and we just want to do how can we package the whole deal so that it wins for everyone and it meets everyone's needs. And that's what we're about. And it's super easy. But if it's already been, and somebody carried a 0% note, it's tough the numbers don't look as easy on the eye, easy to stomach for that note holder, right? And so
that makes sense now, because there's really no front partial, right? At that point.
Well, you can always buy it, but you're buying principal, so the discount's going to look a lot steeper. Right, the higher the interest rate, the less of a discount generally. But then most people, if they want to get their price, like the builders have been doing, you have to be lower than what the banks are doing. It used to be like, okay, if I'm doing owner financing, I can charge 2 or 3 points of what the banks are owning. Are lending at. Okay, well, you still have affordability. And at the lower price points, it works. For houses 150,000 or less, you can still charge, quite a bit and make it affordable.
Gotcha.
But each deal is really custom. And there was one that I was so sad it didn't go through, because I really wanted this. And it was actually 0% down. And I still wanted that front end partial really bad. And I know what she wanted for her heirs. So I custom created something that would look really attractive for her heirs and beneficiaries, because she didn't that note was really not for her. It's like, I'm probably going to die soon anyway. I don't need it. It's probably going to just go to my kids. So I really just like, what is the most important thing to the buyer, the seller, and whoever else is involved? And let's just move the pieces around. There's just, maybe that deal will still come back around, but, you know, but normally I would say, heck no, I'm not buying anything. Where's the 0% down? Normally I would say that, but there's always other factors that can compensate for weaknesses.
Gotcha.
But, yeah.
And I'm assuming that the note has to be at least, what, 10, 20, 30 years? Short-term notes don't really make sense? Like a 5-year term or a 7-year term, 3-year term?
Realistically, if we're talking about properties that are $200,000 or more, I really... I would really like to have properties with a minimum value of $200,000, because then I can bring up to $80,000 to the seller and bring my investors in, and we're at like 50 cents on the dollar or better, right? 50% investment to value. Skip to, are you still here, Sue Ellen? Can you unmute yourself?
Yes, I am. I'm in North Carolina now. I skipped Georgia. We're selling our Georgia lake house.
Oh, great.
Well, Happy New Year, Dawn. It's great to see you.
Great to see you. So what made you move? What kind of...
I wanted to be closer to my very best friend, and it's much nicer in North Carolina. We wanted to have a house that we could age out into.
Oh, okay. So
we're custom building, yeah.
Oh, well, nice. Well, good for you. That's great. So I'm reading.
But I have a really huge private loan that I'm having to foreclose on now because they've defaulted.
Oh, wow. Where is that? Was it a construction loan or what?
No, actually, it was a private loan to a hotel investing group. And I told them I only lend short term, which I try to keep to.
Right.
So I asked them what rate they wanted. I gave them the rate and didn't even negotiate. But then I put a poison pill in that if they defaulted, the rate would raise 5% a month, compounded.
Wow.
Oh yeah, and they took it. So I understand now, because I have to get a foreclosure lawyer, that it's a cap of 60% for a commercial loan.
Gotcha.
To not be usurious. Yeah. So they owed me $2 million, but I'll take one. You know. And it was a $75,000 principal. So I think I did okay, as long as I can get the collateral sold. I'm working on that with a realtor too in Cobb County in Atlanta. So it's just a question of going through the procedure of foreclosure and getting it pre-sold. I'm going to try to get it pre-sold.
Right.
Or I have a contractor. I may make a deal with him, since I'm going to own the property, and private lend to him to develop it and take a share of the profit at the back end and give him a balloon loan. And I do have really great, if anybody needs financing, I have a great financing guy. He's phenomenal. If you're on the East Coast, sorry, you're over there, but he's phenomenal. Yeah. So, and if you know any veterans who are stuck, he can help them.
Oh, well, good to know that. I wanted to address, let's say you said caution on crypto. It's basically a pyramid pump and dump scheme. It's not regulated.
Yes,
just saying you're spring chicken. I'm a spring chicken. I don't think so. Yeah, well, happy birthday, 71. Good for you.
Thanks to you, my dear.
Hey,
I wish I was your age.
Yeah.
I know now I wouldn't be speaking to you on my yacht.
Yeah, well, I think the point is with everything, you have to have, risk management, and you never go all in anything, right?
Absolutely.
And I would say that a lot of the projects are like that. I would say 99% of the projects probably won't make it past the point where we get regulation, but there's some that I think, in fact, who knows what's going to happen, but if it's really not legal, I don't think they'd be going through all these, all these big institutions are trying to get their Bitcoin ETFs, ETH ETFs, and things like that. The regulation, that's the point. Everyone wants regulation so that the big money can come in. And if you look from 2008, when the white paper on Bitcoin is, it is the best performing asset of all time, and is still in a long haul bull run. I mean, the trend is still an uptrend. If you take from
I know what I know. My ex-boss pulled off the largest treasury robbery in U.S. history. I bet you don't know his name.
You're okay. Well,
and that's after he got caught manipulating the stock market. He's the one who created the subprime mortgage scam scheme.
Right. Well, I can appreciate
tax money.
Yeah, I can appreciate that, and so if you're not into it,
me are manipulated. You have to just watch.
Yes, everything is, and it's funny. They say, well, there's so much. Oh, well, Bitcoin's used for all sorts of money laundering. Oh, and cash isn't. I mean, come on. But anyway, thanks I appreciate that. And like I said, it's not financial advice. I'm only sharing what I do. I take a small portion. I have precious metals. I have, I just spread myself all over the place. And if it's not for you, it's not for you.
Diversification is essential. I also mentor in that too. I have 4 buckets that I use to diversify.
Yeah, fantastic.
Everything is manipulated these days.
Yeah, well, yeah, definitely. And again, it doesn't matter how much other assets you have. If you don't have food in your house, and water and medicines, whatever you need, it doesn't matter how much you have. You can't eat your silver. So I don't know. There's just some certain things I like people to think about getting a little more self-sufficient. A little garden, a little indoor tower garden even, or sprouting. There's always something you can do. But anyway, thank you for the comments.
Thank you for having this. I missed you all this time. I appreciate you getting back on board with it.
Well, thank you. It's lovely to hear your voice and have old faces and new faces. Not saying you're old, but
I'm 71. I'm the oldest one on the call.
Okay, well, here we are. Okay, we're half hour into it. Is there any other things that anyone just want to check in, tell me what they're doing before I just make up another thing to talk about?
Well, I'm sorry I had to leave you. It was my Spectrum internet connection and it went down. And I didn't know if anybody had any questions on wraparound. They're pretty self-explanatory, but
oh yeah, when you were off, I was saying this that you probably didn't hear, but yeah, I'm really surprised if the point is you verified that Ticor title in where in Reno, in Carson, in California, where?
In Reno. Yeah.
In Reno. So you're saying they'll insure a wraparound mortgage for FHA and VA?
I don't know if it's FHA and VA.
Okay.
I think it would be.
Okay,
but,
my title company said no, they won't touch FHA and VA anymore.
I'm sorry?
Yeah, my title company that I've been using, last year they said, Don, just so you know, no more wraparounds. We won't insure wraparounds for if you're trying to wrap an FHA or VA loan.
Yeah.
So,
I know that I can't speak personally of that because I didn't ask them about FHA or VA, but that's just a matter of a phone call.
Yeah. Well, at any point, the point is the loan can still get called. So my thing is, here's a deal that, now you guys know my guy Travis, if you've been hanging around. In fact, that's why I started the membership, because I was like, I need more Travises. Travis is a guy, he used way back in the day, used to be a mortgage broker. Or mortgage officer. He just hustled. He did mortgages. He understands, and he's kind of street smart. And over the years, he's probably brings me a handful of deals a year because he knows he doesn't understand everything about owner financing and notes and this whole thing, but he knows enough to just talk and go, Don, do you think we could do something with this deal? And this seller's willing to listen. This realtor gets it. And so I'm just like, you know what? I mean, I like getting my own leads, but like I love teaching and engaging more. So I'd really rather, instead of just say, oh, forget all the online stuff, and just do my own private thing for my own private reasons. Let everyone. I want to empower everybody else to do what Travis does. He has his Joe job, but he makes an extra, on a small deal, $2,500 and up to $10,000, just hooking me up with something where I just buy a front end partial most of the time. Sometimes the whole note, just depends on the situation. But I'm going, why can't I train more people? So I need more Travises. So because you just don't have to know everything. And that's why I have, the marketing materials that I'm continually building, is because I want to have these. The biggest challenge we have in this space is educating people so that they feel comfortable, they don't think it's illegal, whatever. And so I'm like creating these materials and these videos little by little each month, a little more. Hey, these are concepts that your attorney, your accountant, your real estate broker should understand. And if they don't, okay, your title company should get this. This is what I'm doing is I want to create materials that do the heavy lifting, do the introductions, and then you can follow up with your leads, the sellers that you're going after, the realtor leads, realtors that I know a lot of realtors. I don't know if you guys have experience with that, but there's a lot of them aren't doing a whole lot right now. There's just not enough sides to go around for a lot of people. So they're going to need to know, like, if they do have a deal falling apart, they don't care until something's not working. But if they've got a listing ready to expire, a deal falling out of escrow, or a buyer who can't qualify but has a big down payment, those are all situations where we can make something out of that, with just a little bit of flexibility on everybody's part.
Are you doing anything in gold or diamonds?
I do. I have gold. Diamonds, no, I haven't. That's not my low-hanging fruit. I don't. But I have heard that the gemstones are a really good idea. But I guess that's something you do?
No, but I'm going to start doing that. And I wanted to get some contacts for that, but I can do that offline.
Got a raised hand?
Yeah, go ahead.
Oh, yeah. Hi, folks.
Hey, Steve.
Happy New Year, everybody.
Yeah, hi.
How you doing? Just a quick question. I'm just getting started in, or thinking getting started in it, and I know you probably covered this before, but how do you get started? Do you look on PaperStack, or do you have like a marketing plan? You go out to realtors and see if they need any.
Yeah. Well, are you okay with me just asking you a few questions and getting a feel for?
Sure.
Yeah. So tell me what have you done for work for your career up to this point, or what including yeah.
I do a lot of I do tax work actually, really, and I had some rentals, and I sold I had like a couple of two families. I sold them now, and I have some people that maybe want to try to get a better return. So we were looking at, notes really, and so to find the notes or a good one.
That is the so you've had a couple rentals. And you rolled out, and you don't have any more real estate holdings, right?
No, right. Yeah, we sold them out. Now, the price has gone up since last year, since we sold them, and the rents and everything, but we got out of them, so.
Well, I don't think that's a bad idea. There's a lot of people, including Warren Buffett, keeping a ton of cash on the sidelines right now. And there's a lot of hedge funds that are salivating for prices to go down 20% and then come in and buy a bunch of real estate, and so that the average family can't get it. I don't know. Okay, I got to stop this.
Right.
But
you're forced out.
Right.
You
yeah.
5% on T-bill, but
5% on a T-bill, and then so So getting started in notes. So first, I usually say the easiest way is to carry paper on property you already own. If not that, the next easiest way is, we heard Sue Ellen loaned 75,000 and now she's owed $1 million. She's doing pretty good, but that's high risk. That's not like low hanging fruit. She's functioning at a different level, you know, that she can take that sort of, it's just a different world. But the average person, the safest way is a performing note secured by an owner-occupied house. That's pretty standard. And then, but if you want to get your money secured, it's not really a seller finance note, but if you want your money secured by real estate, you can go to your hard money brokers in your area, and you can just say, hey, I have this much that I want lent out. A lot of times they're business purpose loans that are, I don't know, 6 months to 2 years, something like that. So that's the way.
On fix-ups, yeah, on rehabs.
Yeah, so people doing rehab. So then, but then that's another risk palette too. Like for me, in the old days, 65% loan to value is the most that hard money would ever do. There's people doing more than that. That wouldn't be my comfort zone. My investment to value on anything caps out at 65%, no matter what the yield, whatever. It doesn't matter. Right. So the other way is you can try to hook up with people who have deal flow and note brokers, and there's a few big ones. Marinote Exchange, you can make a relationship with him. You can make one. I just don't have a ton of deal flow. I'm a very boutique operator, and I can have a little bit of real estate and notes, and I can just, with all the little tips and tricks of this business, this dance between property and paper, I can make a little bit of deal flow go a long way. And when you get positioned in some of these things, there's lots of times there's surprise happy kickers at the end. Now they can kick you while you're down too. I mean, you know what? If you haven't had a few troubles, then you haven't been playing hard enough. You haven't been in it long enough, right?
Stories from the rentals.
Yeah, for sure. But with notes, like oh man, I had a 4 or 5 year lawsuit that I had to go through, and it was I prevailed, but it still cost me a lot of money. You know, someone who was just I was a little too naive, I guess, where there was a party that was just stealing, doing bad things, doing wrong things. And from the borrowers, just very bad players.
A couple of squatters, yeah.
Yeah, not squatters. It was more high-level white-collar crime than that, which I just didn't see coming. So, but that's how you get that's how I have earned these gray hairs right here and some wrinkles, But that's when you see a lot of sides of things, you can see them coming and learn how to navigate around them. But to your point, it is a trick. If you are a big hedge fund and you buy a bunch of non-performing paper, then you just you bid on these tapes, and it's like a grocery store. Take a bunch and just dump them into your shopping cart. Owner carry paper is a one-off deal. It's hunter-gatherer type of thing. So that's why I don't, and anyone out there will tell you that the buying criteria for the big seller-financed buyers like FNAC, First National Acceptance Corp, and a lot of the buyers are not, as of a month or two ago, their buying criteria has changed like on a dime to be much more conservative. So that's another clue that they're starting to see what I'm seeing. So they used to buy, season it for 3 months, we'll buy it for 92 cents on the dollar. That's not happening anymore. Now they're looking, maybe we'll do a front end partial, or maybe we'll do, I'm like, yeah, that's my idea. But that means I need to create the notes. I need to figure out. So that's why I'm going after seller financing. If I can get through, and what we have there though is the barrier is education and just getting the message out. So that's why I'm here, is I just see there's a lot of opportunity now, and well, there always has been, but there's going to be more. I just think there's going to be more and more opportunity. So I want people to be safe, to be repositioned if they need to reposition. And when you're getting into new things, I don't want to bring my investors in at even 75% on most things, 75% of value of something. I would rather do these front-end partials, but I don't have huge deal flow right now. When I do, I've got all the money. When you have a good deal, it's not hard to find money. Right. So, make sense. You can, right. But to me, or if it's not even buying the front end partial, if I buy an owner financed property at really below market terms, I can turn around and flip it with owner carry. Yeah. Right. And so then I can make money up front and passive income, and that's called infinity return, right? That's infinity return. None of my own money invested, and I'm still making passive income. I get paid up front, I get paid all the while it's going, and I usually get a little bonus at the end too, because of the difference in the amortization schedule. So I like that for both of those reasons. I don't care if I would be easily a principal in something,
and that's when you create the note, and then you flip that, and you collect like the monthly payment and then the back end payment.
Yeah, Jacqueline. Yeah. So what I'm talking about there is if I buy a property for 100, and I've used this example, so I'll just keep with that you've heard before. Is if I buy a property, which I did in 2007, before I even knew what I was doing. That's how I anyway, put $5,000 down. And I had a $95,000 note at 5%, fully amortized over 30 years. But I didn't want a rental. So I turned around and within 2 weeks sold it to someone else for not even that much more, $122, but I took $20,000 down and carried it 7.5%. Right? So then I got I cleared $14,000 after closing costs. So I put 5 down and I got 20 back. So you see, I'm ahead 14,000, and I have a $200 spread in the payment. And then at the end, I had another 11,000 because the 5% loan amortized more quickly than the 7.5% loan. So I got paid 3 times up front like a wholesaler, every month like a lender, and back at the end like a note queen. Okay, these are just.
I love it.
Yeah,
Yeah.
So there's a lot of different ways to approach it to get money. And yes, you can just take your money and invest, but that's usually you're not the active. There's a very big difference between active investors and passive investors. So active investors, is like you're a wholesaler, or you're going to rehab something. You're churning. You already have your lead. It's not that you don't need me to teach you how to develop or to get leads. That's not my job. For a lot of the investors already do it. It's just that they're looking past, they're throwing away leads they already have, and so what I can do is say, hey, let's just teach you to take some of those that you just take them out of the trash, and let's close a couple of them, just because they say no to your cash offer. Most people are making at least 2 offers, a seller financing offer and a cash offer, both. And then if they say no, yes to this, but this part of this, that's where you can, okay, well, you need a little more cash, so let's just structure that. And but yeah.
That's good. Thanks, John.
Yeah. So, Stephen, thanks for your question. And it's a good one. But that is the situation, unless it's your own property you're carrying on, or you work with some private money people that you trust their underwriting. It's just, then you got to just dig them up, and that's a business, becoming any business. Like, I'm in business of digging up leads. Just the way I do it is that I just love talking to people and educating people, and that's my way. I don't send out a bunch of mailers, and I'm not the best SEO. I think Abby with Amerinote Exchange, I think he's probably crushing it the best of anyone with his SEO. He spends a lot of money every month. And so all the people that are sending out postcards, they go, so you can buy a note. Someone's offering to buy my note. Then they go on the internet to like check it out, and then they find him. So a lot of the people that are sending out postcards and letters to note holders, they're driving traffic to the guys that are crushing it online, you know? So, Jacqueline, I will be your Travis. We're going to have a Travis Award. I think that's a good thing. We're going to have a Travis Award at the end of the year for the Property and Paper membership. Who's going to get our Travis Award for this year? I love that. Sue Ellen says she has a source for diamonds at less than wholesale. You know, this woman, there's probably a lot more to her. I mean, what did she say? Sue Ellen, did you say that was your boyfriend that was some... I don't know what circles.
No, my uncle was a 50-year master jeweler in New York City, and he taught most of the jewelers on 47th Street how to make jewelry. So I inherited. I'm the oldest niece, and he only had one son. You're only allowed to give your diamond connection to one person in the next generation. So I'm it.
Well,
so
wow, people, if you...
And wholesale. Yeah, I'm very, very talented at it, too.
Okay, well, if anyone wants to message Sue Ellen...
And I'm not looking to, make money off you guys. I just don't want you to buy retail, please. That's all I'm saying.
Yeah, well, thank you for that. You never know the interesting hookups you're going to get on Property and Paper.
Only buy what you're going to get a GIA certification. It's not an appraisal, but that's what you need to take.
GIA certification.
It's like a birth certificate for the stone.
Yeah.
And it's recognized and respected. So if you have that, you can get the value appraisal more easily.
Good to know. And then I'm looking at, I'm just scrolling through, let's see. You know, is that Dorsey Bodiford that you said she has a book on wraps? Is that the one that she was speaking at a Quest event recently?
I know she speaks. I know her through her father. I took her father's
that's right.
Camp,
okay, I'm thinking of someone.
And then I took a separate course from. She's terrific. She's really good. And she's also, they let her get credit on an incredible book that my other guru, John Heyer, wrote with her father called Solo 401k. And they mentor on how to superload your self-directed retirement account legally to obviate taxes legally or postpone them.
Okay, yeah, that's super interesting.
She's on that book too. You can get that on.
Yeah, I actually have on my list to talk to some of these people who are talking about wraps and subject to and when taking over institutional financing, because in my mind, and the things that I've learned over and been reminded of, but things are different now than they used to be. The climate is very different, and I think the risks are a lot higher. There's teams, the lenders and teams of attorneys are, from what I hear from insider sources, I guess, they're getting ready to go after and nail some of these people who are doing these subject to deals. And let me just, and being punitive, not just we'll call your loan, but now our game is we're gonna charge you. You took our loan over 5 years ago, when it was only, or whatever, let's just say two years ago, you had a 3.5% loan you took over. Well, we could have charged we could have relent that money at 6 or 7%. We're going to charge you the difference that we could have made if you didn't violate our due on sale. So that may be true, may not be true. I'm just sharing an idea where where we have interest rates that are higher, there's going to be more incentive for these lenders to go after and pay their whole departments to go after these sorts of situations. And if you haven't put anything down on it and you're riding it as long as it goes, that's one thing. But here's, in fact, talking about Travis, he brought me a deal where he goes, what do you think about this, Dawn? Do you think we should, anyway, so the buyer is a Hispanic buyer, and they have like a lot of money, like $160,000 they're going to put down on a, I don't know, $350,000 to $400,000 house. And yeah, it was they wanted a $400,000. So they're going to put this down, take over the existing loan, but that's so much money. And then what happens if the bank does call the loan? And who's going to pay if there's a penalty, who's going to pay that? Well, they're going to be out of luck because they can't refinance. If they could get financing, they wouldn't be looking for owner financing. So then here they put $160,000 down, and that loan could get called at any time, and they'll lose their home, they'll lose all that down payment, unless they can sell for a profit and get their money back out, in short speed. So for me, the most conservative thing to do is to do it in a way that's 100% federally compliant. And so even if they look and they try to, and you can give them all the information and they can't contest it, they can't call the loan, they can't do it. So in any case where someone's putting a big chunk of money down and they don't have an exit strategy if the loan gets called. See, these buyers, they don't know. They wouldn't know. And there's also teams of attorneys that are going after lease option. Did you have a lease option? Were you wrongfully evicted? Did you have a what do you call it? Rent to own? Did you a lease option? Did you get evicted? Where they're going to go back and say, all that? You had equitable title. You couldn't. It was illegal for you to be evicted. We're going to go sue that person that evicted you for non-payment, and you had to move out because they should have had to foreclose on you because you had equitable interest. It's very hard so I don't, even if you think you're doing contract for deed, lease option, all that, you think you're getting around foreclosure, you're not. And like I said, there's whole teams of attorneys going around, and so that is a big risk. And if the court nails you, they will punish you. They will you won't just lose the house. You might have to pay up to 3 times damages or something terrible like that. It's very dicey now. So that's why I use I'm a fan of the title holding trust. There's some instances I wouldn't consider using it at all, but in certain situations, that's the only one I would use, especially when there's a lot of risks. So I guess, wow, I've had a lot of soapboxy things today. I always do. You guys are good sports. Okay, I see right before we leave, Jim and Sue Ellen might want to connect. Hopefully you guys can chat with each other real quick before we close the call. I just want to appreciate all of you for spending the time. I really think this whole space is so fun. You just go out there and create financial solutions, one mom and pop to another. All right, I love all of you. We'll see you next time. Bye-bye.